meeting. First item on the agenda is to call the roll.
Okay, Chair White,
Here.
Mr. Cervantes, Ms. Cabildo. Here. Ms. Kurgan for Secretary Moss.
Here.
And Mr. Sertich.
Here.
We have a quorum.
Thank you, Courtney. Item number 2 is approval of our September 16, 2024 meeting minutes. I'll entertain a motion to approve.
So moved. Do you need a second?
Look, if there are no questions, minutes are deemed approved. Item 3, chairperson's comments. So it's great to be at this New Opportunities Committee meeting again. I've been all over Irwin and now Tony and Claire, everyone. When are we going to meet again? So it's great that we have reconvened. It's been a while since we've met. Appreciate your time and willingness to re-engage this very important committee. Today we're going to revisit our ongoing discussions around multifamily and single-family lending and what this committee can do to push initiatives, new initiatives, existing initiatives forward. The topics are central to our broader policy conversations, and the input from staff, the committee is essential as we assess the environment going forward. And we can ultimately figure out where we add value. I think that's important for us. Tony, any comments?
Yeah, thank you, Dr. White. I have heard some questions about when we're going to have another one of these New Opportunities Committee meetings. So it is something that I wanted to make sure we have, because this is really why I came to CalHFA, which is to push CalHFA in directions to do more than it has been doing, and to make sure that we're fully utilizing the resources that CalHFA has at its calling. So first, over a year for this committee has been too long, so we won't wait another year to have this. Second, I know that there were 3 main priorities that came out of the last, and this was again over a year ago, 3 priorities that came out of the committee that I wanted to sort of quickly go over and provide updates on where we're at. So first is the getting the My Access program up and running. That one is fully operational. We have our financing team, our home ownership team, working together to issue taxable bonds to fund down payment assistance loans for first-time home buyers. So that one is operational, gives us another avenue to fund down payment assistance projects or loans. The second is our shared appreciation loan program, and partnering with other localities, businesses, governmental entities to help them administer their shared appreciation down payment assistance programs. Ellen Martin, a little later, will talk a little more about where we're at on that. We have had several discussions with multiple parties on that, and we think we're very close to actually announcing a program in that regard. But we're continuing to talk to other partners as well. The third, and one that I want to talk a little more about, is our partnership with local governments to help develop housing, the CHIP program. That one, I think we put out an RFI, have moved forward a little on that, but I would like to propose that we pause that a little bit until we build up our foundation a little more on our multifamily lending programs, so that we can make sure we're fulfilling our core mission of lending prior to expanding out in other directions. Catherine McFadden, our Director of Multifamily, will talk a little more about that in her presentation about our plans on the multifamily side. But those are the three, because two of the three, I think, were accomplished and continue to move forward. The third one, we want to not lose sight of, but want to make sure that we have all of our foundation built before we move in more innovative directions on the multifamily side. With that, I'll turn it back over to you, Dr. White.
Thank you. Fair enough. Appreciate the direction for the committee and the staff's prior help and future help with getting initiatives moving. Two things I heard there, and second and third, it's partnership opportunities that I think goes into the broader board's mission and ask at our strategic meeting to lean into partnerships. So I think that's going to be, those two items are going to be some very interesting ways we can develop relationships across the agency. So I know we call it CHIP and shared appreciation, but the names that are going to come through that, I think it's going to help us in other aspects. So with that,
I
go
have a
ahead.
question. So I totally understand the need to pause, and I really appreciate setting the foundation. But you did say that there was an RFI, so will we get to hear if there was any interest, like from local governments, from partnering? Because that's something I was just a little curious about, because I do feel like it's an important opportunity. I realize you don't do stuff just because you have to know that they're going to be successful before you launch, but I just have a curiosity because I do think it's an opportunity.
Yes, for sure. And I think that to the partnership, we will definitely get the RFI results out. We'll summarize it and get a report out. I think the other piece is on the partnerships, we just want to make sure that we're partnering in ways that we're both utilizing our strengths and our partner strengths as well.
Absolutely.
So this is definitely not us pulling back from partnering with localities.
Oh, yeah.
It's definitely a way just to sort of
Oh,
revisit.
yeah, I didn't think of
reframe.
it that way, but
Yeah.
I understand that.
But yes, we can
really
show you
great.
sort of some of the ideas that came from that
Okay.
we think that we would like to explore further in different ways.
Okay. Any other thoughts?
I just appreciate that we're meeting again, and I think we might hear this when we hear from Director McFadden and also from Director Martin. In the time since the New Opportunities Committee has last met, there's been a lot that's gone on at the federal and state level. Expansion of the 9% credit, reduction of the 50% test, and then a lot of changes at the state that create opportunities and requirements for new partnerships. That's the new housing agency, the new Housing Development and Finance Committee. So I do think in some of the bleak ones, like the lack of federal funding and commitment to funding for housing outside of the tax credits, which is not like dollars. There's still some opportunities to be had. And one other thing that stuck with me was the local and developer partnership using land use tools, where we saw a pretty impressive mixed income project, the one that used SB 35, and some innovative financing for the Costco project. So in this time, we've still seen a lot of projects coming in, and I'd just offer that as we think about what New Opportunities Committee can do, also reflect on some of the innovations that have happened naturally, and are there places that we want to push or make pathways for to happen more easily. So excited for the conversation today.
Thank you.
Thank you, Dr. White.
Item number 4, we're going to start with multifamily lending opportunities, and Director McFadden is taking the table.
Good morning, Chair and members of the committee. My name is Catherine McFadden. I'm the Director of Multifamily Programs. And I wanted to echo the comments of Director Kurgan and Cabito and White. Many things have changed, and one of the things that we are doing right now is developing a new 3-year strategic plan, which includes bold initiatives for getting units built quicker and upstanding our construction lending. There has been, the governor's reorganization is underway, and as Director Kurgan mentioned, there has been a lot of work and a lot of partnerships, especially with the Housing Development and Finance Committee, which is standing up on July 1st. All of these developments make this an ideal moment to revisit and discuss CalHFA's multifamily lending opportunities. We very much appreciate the committee's feedback today on priorities, strategic direction, and where you believe CalHFA should focus as we build the next phase of our multifamily platform. So we're going to start out, we're going to walk through the current multifamily lending programs. We are going to talk about our construction lending, partnerships with HDFC, and non-tax credit lending opportunities. So the goal is to provide a clear picture of where we are today and where the multifamily division is headed. So first, we're just going to briefly start with the current multifamily programs overview, just to remind everyone what we currently have. So CalHFA offers long-term taxable and tax-exempt permanent loans that support new construction and acquisition rehab for affordable housing development. We also have the mixed income program, which offers long-term subordinate financing as a second lien, which serves mixed income households between 30 to 120% of AMI. And lastly, we have our tax-exempt permanent loans. We act as the bond issuer, supporting borrowers' access to lower cost of capital. And as the conduit issuer, we issue both tax-exempt and taxable bonds for financing for acquisition, rehab, and new construction. And then lastly, we have the bond recycling program, which allows us to use unused tax-exempt bond capacity to be reused after construction debt is repaid. Slide 3, please. Oh, back to the housing construction lending. Thank you so much. Okay, so this is really what Tony was talking about building the foundation. What I want to emphasize here is that what we're doing here is truly foundational. Construction lending is not just another product, it is the groundwork for the next phase of CalHFA's multifamily strategy. Developing and launching a construction lending program is one of the major goals of our 3-year strategic plan. It is a core pillar of how we intend to grow the multifamily platform and better align with statewide housing production goals. But before we build more advanced or innovative financing tools, we need to strengthen our core foundation: staffing, processes, risk structure, technology, and organizational readiness. So construction lending is inherently more complex, and over the coming months, our top priority will be funding that foundation and building it. Once it's strong, we will have the platform and the expertise to responsibly expand into additional innovative financing solutions and more flexible capital structures. So construction lending is the starting point, but is the strength of this foundation, and it really determines what we can build on top of it. Next slide, please. So next up is the partnership with the Housing Development and Finance Committee. So we have been closely coordinating with HDFC as we prepare for the launch of the 2027 stand-up and our construction lending launch. HDFC will be able to leverage CalHFA's existing systems, interagency experience, and operational capacity, creating a scalable structure that supports both agencies' goals. And this alignment will also create significant efficiencies for borrowers, reducing both time and costs by streamlining and eliminating duplicative steps and ensuring more consistent standards across the state entities. This partnership will strengthen state alignment and accelerate our collective ability to deliver more housing. Next slide, please. So last is the not tax credit lending opportunities, which I know everyone is very interested in. And I just wanted to put forth the different types. There's workforce housing, naturally occurring affordable housing and preservation, acquisition and rehab projects that don't rely on low-income housing tax credits. We talked about partnerships with local government and housing authorities being incredibly important, bridge financing for acquisition on timing gaps, and 501c3 bond financing with nonprofit partners. I just want to mention we closed a really large 501c3 project yesterday. And so as mentioned, these are the things that are just naturally occurring as we are using our lending expertise and really collaboratively working on innovation. So these options allow us to respond to development opportunities that maybe don't align with tax credit financing, but would still advance affordability and preservation. So, as our multifamilies continue to evolve and respond to the market needs, state policy direction, and opportunities emerging from our new strategic plan, the expansion of construction lending, deeper interagency and external partnerships, and new non-tax credit pathways, we are positioning CalHFA to deliver a more comprehensive and adaptable financing platform. So I'm happy to take questions and feedback and comments.
Thank you, Director McFadden. I will open it up to the committee for any questions.
Go for it, please.
Well, it's so, I love that you've outlined all these different opportunities, because sometimes it's hard to like just think of all of the possibilities. I'm curious in the kind of process in developing a program, like where are the places where you'll decide like what the loan to values would be, like on a bridge financing product, or, you know, in terms of like a construction loan? Are we seeing ourselves coming in behind a, you know, a conventional bank, or do we see ourselves doing like 100% of the loan? And so I guess I'm just wanting to understand, like, are those type of, because those are deal points. I imagine we just delegate that authority to the staff to develop like the best deal points, or do those things eventually come back for us to have eyes on? Or so that's I'm more interested in, like, as these products develop, because I think a lot of times my experience as a developer was there was a lot of capital available, but it didn't always work, right?
Absolutely.
It didn't work with what I had or the loan to value. Like sometimes, I mean, obviously, like everybody wants 110%, you know, a loan to value, or 120% loan to value. So I'm just curious, like, what we're going to do so that the capital is accessible to the developers that we'd like to see accessing it, and to get to the product that we'd like to see.
So I think there's a kind of a number of pathways to your question. I think our core construction lending will very much be developed based on appropriate risk, what's happening in the market, and being responsive. One of the things that we want to do is we do want to be a market gap filler for construction lending. We do know that there are lots of options, especially in the private market, but we do have tools and we do have incentives that we can offer so that we really are putting out a product that is going to be responsive to the market. If you recall, in one of our previous board meetings, we were talking about our strategic plan initiatives, and one of them was not only to start the construction lending program, but to, over 3 years, with the goal to lend on 50% of the private activity bond cap, which is a very large number. So what we will be doing is developing and going out to stakeholders, and all different kinds of stakeholders. I think one of the things I want to see and take a look at our existing lending, not only in our MIP, but also in our conduit, seeing, you know, what are deals that are working, and what are ways that we can step in, or deals that actually maybe aren't quite to the finish line, and how can we participate? So I think that the basic construction lending is really going to be market driven. How can we provide additional incentives, and how can we fill that market for our partners? And one of the ways that we think we can is obviously lower cost of capital. We need to have good efficiency, streamline, and then working with our partners like HDFC, potentially administering funds during construction, which is a benefit to the borrowers. It's, you know, lighter, you know, like one touch, as opposed to several different entities trying to make disbursements. We believe we can add a lot of efficiencies for our borrowers. On another front, I think there are other lending opportunities that we have been exploring, like with CDFIs. And one of the ideas that we have is partnering so that we can start a pilot to scale up, to test the market, and to have some, you know, demonstrated pilot projects to make sure that what we're doing works. we want to make sure that what we're putting out there is responsive to the market, it's going to meet the outcome of our mission, and it's ultimately going to create more affordable housing more quickly and more efficiently.
So I know in philanthropy, I've been part of efforts where we're standing up loan loss reserves,
Yeah.
and often we've had government come in and be like in that first loss, and then philanthropy's coming in and taking like the second hit. Like, do you see a future where the state of California is willing to put in money for like a loan loss first position to like entice other folks potentially in?
Yeah, I mean, I think that is a potential future for where we're going. I think right now, to directly answer your first question, I think when we talk about our construction lending program, we are talking about being the first lien lender on these projects. So essentially, we would be first loss, right, in that regard. And so it's doing the underwriting, building out the tools, building out the disbursement capability is some of what Catherine was getting at. And part of the reason to do that is also to make our permanent lending, which is really the core of our multifamily business, with the financing tools we have, if we are the construction lender, it allows us to really provide more efficient permanent lending as well, permanent lending products, because of the way we issue bonds and the way CalHFA operates. So that's one of it's a pathway there. And I think one of the things that Catherine was getting at with these partnerships is sort of what you're getting at, which is doing some sort of shared loss programs with other banks as well, where we both put money in and we both have a shared loss. So it's about leveraging, again, I think more than anything, it's about finding what markets aren't being met and how CalHFA can step into that and help get more efficient capital out there. If we can provide a 5% construction rate versus a 5.5%, we're putting a little more capital out there because there's a little less that needs to go out for that. So lower rates is more capital in some ways. So if there's different things that we can bring to the market, we will. And if there's not a place for us in the market and we're not providing anything, then there's no reason for us to be there. So we want to make sure that we're adding value in where we're at.
Thank you.
Any other?
Maybe, please, thank you. Maybe you could talk to us a little bit more about not only the partnership with HDFC that's emergent as that entity's being stood up, but some of the other state teams that you're working with. And because I think this is, let me back up. I think this is the Secretary's expectation and part of good government, that as much as possible we're collaborating as state teams with each other. And the Governor's Reorganization Plan has really solidified that commitment. So CalHFA has been doing, I'll just not bury the lead and kind of set you up a little more directly. CalHFA has been doing more significant engagement with stakeholders in partnership with HCD, in partnership with our agency, BCSH. And so, Catherine, maybe you could talk to us a little bit more, because HDFC will get stood up July 1st. Its first, for our language, offerings of public subsidy would be in calendar year 2027. But we're not just in some echo chamber in the state. So I just want to make sure that the other directors have a sense of what this looks like so that they can understand the orientation for collaboration. Could you tell us more about that?
Absolutely. So I can say that there is a ton of interagency collaboration. I am participating on numerous fronts with working groups, whether it be in 519, whether it be with the outreach to HDFC stakeholders that BCSH has been undertaking. And there is a core working group that is HCD and SIDLAC and TCAC and CalHFA that are at the table weekly, more than weekly, having collaborative conversations about how we move forward together. How can we use our best strengths together to streamline, to create the efficiencies, and really to have the outcome of the goal, which HDFC is to have one single application, one review process, and one award. And there's a number of funding sources that are coming from HCD that will go under HDFC, along with the MIP and AHC, I believe. And all of those sources have historically been very fragmented process to actually make applications and borrowers and developers, and timing of just trying to access the capital has been very, very challenging. And I can speak very directly because almost 2/3 of my career I have acted as a developer, and to be in this moment, to be in this place, to see the collaboration and the really thoughtful thinking to make a difference and an impact of these agencies together for the first time in a really powerful way. So it is something that I'm extremely excited about, and we have a ton of not only interagency collaboration, but external stakeholder collaboration who is informing every step of the process. It's a very transparent process where stakeholder input is being put back into the interagency work groups so that we actually implement and we hear our partners. And then guidelines will go out, there'll be public comment, there'll be a lot of opportunities to ensure that what we're doing between all the sister agencies actually is responsive to our stakeholders.
Thanks for that context. And it would just real quick, mentioning that reduction of friction that Catherine is describing, I think will make more clear our opportunities for where there are gaps in the market, instead of just a hodgepodge of there's a lot of need, there's a ton of places to show up. But if we're cleaning up our broader state team and showing from an affordable perspective, how can we better infuse? So that slide of all the different boxes and players, that is a more expansive view of the people who are brought into deals. And so thank you for touching on it, because that's the type of outreach that I think we need to expect, not just for the GRP, but ongoing, so that we're really hearing how we can build the best stack and how CalHFA can be the preferred lender in all of it. Excuse me, Director, so sorry.
No. Thank you, Director Kurgan, for that perspective.
May I add something?
Yeah, go.
Yeah, I just wanted to layer on to what Director Kurgan and Director McFadden talked about, which is, this is a perfect time for CalHFA to be really making sure that we're able to serve the broadest community possible in terms of our lending products, because of the alignment that we have, and it's our chance to sort of step up and be as partner with the other state entities, and to, in the past, CalHFA has on and off been a good partner with the state entities, but it hasn't been consistent. Now's the time when we're all going to be working together, and so it really is about building those state partnerships and building that trust with our other state departments, so that we can all work together and use the state's money as well as CalHFA's money, federal money, as efficiently as possible. And that's our goal with some of these programs that we're developing.
Thank you. So I have two questions, or maybe one request, and it's maybe the entire executive team. With setting up HDFC and how we as an agency fit within this new order, with all of the other state partners, I'm thinking for the board and for this committee, could we create some type of visual map that shows how we all work together, how we're expecting to work together?
For sure. I will, for sure we can do that. And I know that, as Director Kurgan had said, there's been a lot of outreach from the agency on sort of how this is set up. I will just say that at a high level, HDFC will have 3 board members. It will be Secretary Moss, it will be Director Velasquez, and it will be myself. Will be the 3 statutory board members on overseeing HDFC. So it sort of creates that alignment between HCD and CalHFA at HDFC. But we can talk about a little more about how the new agency and everything. It's not going to change CalHFA's structure, right, but it will create closer ties between us and our state partners.
It has the word committee in it.
Yeah, so the committee is those 3 members.
That's the 3.
Yeah.
Okay. Yeah, any, simple 101.
Yep.
Appreciate that. And one other, I want to go back to the construction lending. We're going to hire the staff, or we're going to go buy a bank?
So the intention is that we do have an existing core. And we're going to build that up. There are key hires that we will need to hire in order to ensure, like, for example, disbursement or more expertise with credit analysis and, you know, risk in construction lending. I think that we have a very robust training program that we're putting in the budget, and that's going to include not only staff training, but likely consultants coming in for the short term so that we can develop that in-house expertise. One of the ideas that we're talking about is the partnership with a CDFI, and that we would basically partner, but our team would shadow as they do, you know, originations and the underwriting, so that during that pilot, we can have training real time as well. So it's a combination of many things. It's training, it's consultant in the short term, building up our expertise, and partnerships to build the in-house expertise. That's my goal, is that we will be self-sustaining. It will take time, and that's, you know, something that will have to be considered. But in the meantime, we're looking to way to do pilots again to get that training and expertise quicker.
Totally get it.
Yeah, no,
Thank you.
I'll add to that CalHFA was one of the largest construction lenders in the state in the early to mid 2000s, prior to the financial crisis, when we sort of pulled back from a lot of our lending programs. So CalHFA has the structural ability to do this. We just have to build up some of the capacity and the abilities to make that happen. But I think it is important that we do work with, you know, form partnerships again, to make sure that we're doing things thoughtfully and in a manner that we can build out productively.
Okay. Any other committee questions? I'll open the floor for any other comments or questions.
For the public?
Yes.
Okay.
Public,
If any
sorry.
members of the public, either here in person or watching on Zoom, would like to make a comment, please raise your hand. There's none at this time.
Thank you.
All right.
Thank you,
Thank you.
Director McFadden. We'll move to item 5 and pivot to single-family opportunities. Director Ellen Martin.
Is that not what you want?
No. Nope. All right, well, good morning, Mr. Chair and members of the committee. Ellen Martin, Director of Home Ownership, and here today to talk about new single-family program opportunities. So, as a reminder, our single-family or home ownership programs focus on providing down payment and closing cost assistance to low and moderate income first-time homebuyers. For the most part, our assistance programs are designed to recycle funds, meaning that by and large, they do not rely on annual general fund appropriations. From time to time, we do, of course, also implement other boutique programs that are usually supported by a one-time general fund budget appropriation or implemented as kind of a one-time proof of concept. Next slide, please. So, over the last roughly 5 years or so, we have developed and deployed a number of new programs. Several of them were initiated by legislation or a specific budget appropriation. Over that time, we've done a lot of new and innovative things that we really find instructive as we're now thinking about how we want to move forward. So by way of example, we have developed a new delivery system and experimented with new product types, including a forgivable loan and shared appreciation. We've formed new partnerships and strategies to reach underrepresented communities. We've identified and deployed new to us financing mechanisms in the form of taxable mortgage revenue bonds. And we've specifically targeted supply challenges through the ADU grant program, which was hugely edifying for us in terms of challenges and limitations in that arena. So all that said, and probably more left unsaid, We really have two primary takeaways that are shaping how we're proposing to move forward in the next strategic plan. The first is that there's significant variability in terms of the type and amount of down payment assistance that's really needed to support home ownership in various regions and for various populations throughout the state. And then secondly, it's really the lack of supply of entry-level homes on the market that is the number one impediment to home ownership in California. So with that in mind, if we can go to the next slide. So thinking about, that need for variability in the types and amounts of down payment assistance and how they are delivered, I wanted to provide an update regarding the initiative that we first introduced to this committee in 2024, the employer-based shared appreciation partnerships. So in brief, we are working to establish a pilot program whereby we partner with an external entity that is interested in providing employer-funded down payment assistance for its employees. In this case, the assistance would be modeled after the Dream for All Shared Appreciation Loan Program. That partner would provide funding for a Dream for All-like shared appreciation loan, and CalHFA would administer the program using our loan origination and servicing infrastructure that we developed as part of the Dream for All program. Since we last talked about this, CalHFA has been working to establish a pilot program and has executed a funding and implementation agreement with a potential new program partner. We're working with that partner to finalize program guidelines, parameters, and requirements, and do, as Mr. Surdich said earlier, hope to make a formal announcement soon. If this pilot program is successful, we do think it will pave the way for several other similar partnerships with other major employers throughout the state. Next slide. So now kind of taking a much bigger step back and thinking just a little bit more thematically about where we're going on a moving forward basis, I want to sort of return to those key takeaways that I talked about earlier. So what you will see in the new strategic plan when it comes before you next month is really a key focus on two things. The first is calibrating our existing tools and down payment assistance programs to maximize the reach of our programs, right? So really taking a close look at the types of assistance that we're providing, as well as the amount of assistance and what we're seeing in terms of where those programs are succeeding, and seeing what we can do to right size our programs in a way that will generate the most impact relative to the resources that we have available. And then secondly is really a laser focus on supply. I've said time and time again, I'm sure you've heard me say this, that our down payment assistance programs are really only as good as the inventory of homes that our borrowers can afford on the market, right? We've also acknowledged and we've talked about the fact that down payment assistance is basically a demand side incentive, right? And on its face, it doesn't really encourage new supply. I think over the coming year, we'd like to challenge that assumption. We'd like to really think about ways that down payment assistance, potentially coupled with other mechanisms, could be used to actually incentivize new entry-level supply. So key next steps will focus on identifying the available financial resources for these concepts and then matching those resources with mechanisms that can help to move these initiatives forward, and of course continuing all the while our stakeholder and policymaker engagement to help us develop and refine these new ideas. So with that, I'm happy to take any questions.
Thank you, Director Martin. Any questions from the committee?
I think just for the future, the potential for marrying the multifamily construction with the construction of homes that would be able to access, shared appreciation and other home ownership. So that's my only question, comment, but I asked it before, right? It's like, I just feel like it's such an opportunity to do construction lending for single family in a multifamily type setting.
Yeah,
In the future,
I'm happy to consider that. I think currently the way we're structured internally is very different on the homeownership
Yeah,
versus
yeah.
multifamily side. But it's something that we could leverage the knowledge on either side to sort of help build that out.
And I completely understand like the need to sequence things, but I think like, you know, once the capacity's built on the multifamily and you have that expertise that, to explore that, especially potential with like the partnerships with local government, right? I mean, there might be opportunities to, you know, yeah, like land trust the land and like you do multifamily lending on the, so, yeah, just
I think that's
way in
great.
the future.
We have a call set up for later this month with a group of community land trusts to discuss different things that they're looking for. So we have headed down this path a little bit, not in terms of actual program development, but in terms of discussion with partners for sure.
That's great to hear.
I'm glad you brought that up. There are some multifamily programs, subsidy programs in the state that allow for home ownership, but it's an untapped part of the market where people haven't really figured out the right ways to finance it, and even when it's allowable, it's still difficult and feels novel. So I think that is a good thing that we can keep looking at. I'm thinking about, you know, we have a budget proposal right now to move a portion of the housing component of the Affordable Housing and Sustainable Communities Program to the Housing Development and Finance Committee. That program allows for home ownership. And so as we think about guidelines, maybe that's an opportunity for Director McFadden and Director Martin to just consider like how we partner and build that part out for HDFC. And then the new transit-oriented development program that will be funded by vehicle miles traveled mitigation also allows for home ownership. So just to think about how those subsidy programs might be part of the identifying available financial resources to partner with or to leverage in a different way, but that we're thoughtful and comprehensive in bringing the right expertise from CalHFA to the review of those guidelines as we develop them. So I'm really glad that you mentioned it. There's at least one project in San Isidro from Casa Familiar that worked on this, and their traditional tax credit project, but they plan to convert to homeownership after the 15-year compliance period. And then there's hybrid projects here in Sacramento where Habitat did one phase and Mutual did the other. So there's those types of innovations, and that it shouldn't be limiting to us as we think about what's possible. So I share your goal and really appreciate not only the work that you've done in employer partnerships, which can be challenging. So excited to see that press release and hope that it moves soon, but then also the focus on supply. And I think, yes, to foundational tools, and then as we have those, being as tenacious as possible to think about how to apply them, which is what I heard from you as well, Director. Thank you.
Thank you, Director Corrigan, Director Cabildo. Congratulations to you and your team on the efforts getting to the pilot. I too have heard about this for a while. I'm waiting for that announcement. I think it'll be exciting for the agency. So congratulations on getting this far. And thank you for introducing or laying out your assessment of down payment assistance and how good it is and how great it is, but we don't have the supply piece. So putting that on the table, I think is, this is what this committee is about, new opportunities, and if we can explore increasing supply for our bars that can't afford what's in the market now, I think we're doing really good.
If I can ask one more thing, and not that you follow up now, Ellen, but that we keep the opportunities of exploring approved housing elements by Housing and Community Development and the local governments who have programs in each of those housing elements to remove impediments to their housing goals. And many of those programs, I would be surprised if there's not a requirement for a homeownership program within housing element law, but to consider what have local governments already, what are they calling for? Just because they have a program doesn't mean that they have funding for it. But I raise that in part because our own city of Sacramento is exploring homeownership opportunities and kind of small lot conversions. And with condoization that can happen through ADUs, there might be some other opportunities, smaller starter homes, but just the ability to connect land use tools and a pro-housing movement where many jurisdictions are thinking about the continuum. What else are we seeing already? So not for today, but just to kind of think about that, and maybe another partnership with HCD as they work on program implementation with local governments. So just planting that seed for now, with many thanks.
There aren't any other questions. Courtney, could we open up?
If any
Public comment?
if any members of the public would like to make a comment, please raise your hand. There's none at this time.
Thanks, Courtney. We will now go to item 6, public comment for any general matters.
If any members of the public would like to make a comment, please raise your hand. There's none at this time.
Okay, with that said, we are adjourned. Thank you.